We have the Gaming Mergers and Acquisitions Update with Alina SOLTYS presenting. Alina is a senior analyst for the Quorum Group, which is an M&A advisory firm with a 28-year history of focusing solely on sell-side technology and gaming clients. They've sold over 275 companies. So you have Jim here. Alina provides transaction support with research and financial analysis, as well as presenting at educational events and conferences such as Gaucho Connect. Alina did this presentation last year. We're having an updated version now. It was excellent last year, and let's listen to her this year. Alina?
Great, thank you. I'm trying to... Is it possible to do this from beginning?
Did you want to do a presenter view?
Yeah, I did.
Can we do that? We have to reset the entire display. That way.
Sorry, sure.
That's okay. I didn't even.
There's anything else?
Where is it?
Check.
See if that'll do it.
Perfect. Thank you. Sorry about that. So my talk today is stepping a little bit away from the everyday operations of running a gaming company to taking a look at when your company hits that peak where you're ready to move on to the next level, provide some insight as to what we're seeing in the marketplace today in a broad sense of the technology space, zooming in onto the gaming space, taking a look at what the investment fundraising is being done, and then talking about some of the trends and predictions that we see coming up into the next year or so. We've had a very strong start to the gaming M&A world, and this is driven in part by some of the tech valuations that we're seeing here. So at Quorum, we track 6 segments. So we track horizontal, vertical applications, IT services, infrastructure, consumer, and internet. And so this is an aggregate view of all quarters, all 6 segments in a quarterly view. And you can tell that the revenue multiples and the EBITDA multiples are tracking up, which is providing confidence for more deals. We also track on a monthly basis the Quorum Index. And so what the Quorum Index tracks here, and we're comparing first half 2012 to first half 2013. The transactions are on track. They're a little bit lower than last year. We're seeing a lot of mega deals being over $1 billion. And you can tell that there are both private equity players and strategic players getting involved. And in the past, private equity usually was a second choice to a strategic acquirer. They are very conservative on valuations. We have not been seeing that. Lately, they've been pushing up values, and they have been actively engaging, competing with strategic players for these acquisitions. And then you can also note that VC-backed exits are up, and that means a lot more of the funded companies are trading hands, which is also good news for those that have raised funds. So who has been doing the most acquisitions this year? From a strategic perspective, Yahoo has definitely stolen the headlines. They've acquired over a dozen companies in this year alone. A few that many of you probably have heard of, Tumblr for $1.1 billion. They've acquired a few game tech companies such as PlayerScaler that has a nice platform for indie developers to distribute their games very quickly across multiple revenue streams and connect directly with publishers. We also see Facebook on this list as well. They have been doing about 40% of their deals focused only on mobile. And they also actually acquired a gaming platform play similar to the PlayerScaler called Spaceport. And then we also see Microsoft coming in. Microsoft has been a little bit light on deal activity lately. They're picking that up, and this acquisition, as related to gaming, was for Pando Networks, which makes sure that when a player commits to downloading a game, that the download actually processes to the end. So there's no drop-off there. So these are mostly US-based companies. What are our friends in the East doing? I've gathered a slide here with some publicly traded Asian firms. And what you'll note here is the huge amount of cash that they all hold. The typical path for a successful Asian firm is to IPO, and they raise all this cash. On this sheet alone, it's representing about $30 billion. And they are using these funds to do acquisitions. Their activity in the space, as you can see, 90% of all of these companies have done acquisitions in the past, and they are actively acquiring. Those that have the little gaming icon have active engagements or interests in gaming as it relates to their overall business model. So these players, as we'll see later, are contributing to a lot of the activity that we're actually seeing in the M&A space. This is a great chart that compares video game investments and M&A. So the top chart that you see, that blue, dark blue, is M&A activity. It hit an all-time high, $4 billion. Now compare that to the lighter blue chart, which is the investments. There's a bit of a gap that's forming now between the overall value. Good news is that the red line on the very top is tracking investment volume. So what we're seeing is investors are choosing to invest and diversify their funds into multiple companies at smaller amounts rather than doing a one-time big drop of money. So who's driving this M&A activity from the gaming side? And there's a very interesting phenomena going on, and many of us have kind of thought about it in a way that consoles and PC manufacturers are steadily declining, and unfortunately they are not moving to acquire new companies or new types of popular companies such as the mobile and online. They only represent about 5% of the overall deals. Something needs to change with these guys, otherwise they're going to be going out of business very quickly. So many of these names come from that mobile social side. You see Zynga here acquiring more than one company a month for this year, propping up their talent, adding some more new products. We'll see if this trend continues with their new CEO. Likely so. Their focus will probably switch away from the social gambling side that we have seen, as on the right side of this chart, about 5 of these companies are involved in that space. And we see Aristocrat, which is a traditional slot company, been around for over 60 years, has been moving into the social online space. We see IGT further propping up their investment and double down with some more investments. And then there's this interesting company on the very right, Zatica, which is a little bit of a new way to raise funds. So this company landed on the London AIM stock exchange. They grabbed some funds and decided to invest in some gaming companies. So they chose to, and they're going to be growing it through the investment that they've raised. Some notable exceptions of who's missing from this list as compared to last year: Rovio. Rovio has not been doing any acquisitions, focusing on creating more of an entertainment firm rather than a gaming only. And then Tencent is also on this list. They have been going through some management change, as well as just taking those companies that they acquired and implementing them well into their organization. But we're expecting that to change as the new management becomes familiar with the company and has some new strategy plans there. What does this look like by sector? So we see mobile continuing. The top chart is 2012 as related to the first half of this year. Mobile is on track to do the same amount of deals and even more in value. We see social casual dropping off down after Zynga's disappointing IPO. The investors have been processing that and have been choosing to invest in other segments of the marketplace. And then you see console PC down on the bottom, and these are unfortunately some of those bankruptcies and divestments that needed to happen at certain periods of time, and this is when they're happening. So that was a broad context of the M&A marketplace. Let's take a quick look at a few deal highlights just to highlight some trends that are happening. And one of those, as many of you may have been in the the social casino segment here at Casual Connect, it certainly has been seeing a lot of acquisitions and activity in the space, especially after the legalization hit. Many players are now becoming more confident and assured that further territories are going to be, and states and countries are going to be expanding and having some new ideas about legalizing gambling. William Hill, based out of the UK, took the biggest bet here with Sporting Bet out of Australia. Sporting Bet focuses exclusively on sport bets, which is the biggest segment of the online gambling space. Another trend here, the mobile world, so a few highlights from to support that stat that we were just talking about earlier. Hasbro is one of those companies that has been seeing their toy business decline. Fortunately, they've been propping it up with gaming, and to take that a step further, they acquired a majority stake in Backflip Studios. Backflip is going to help them promote and expand their already really great gaming assets to a mobile platform. And you also see more of a traditional firm in Japan, SoftBank. So SoftBank has decided to become the premier internet firm out there, and they saw the great success that Gung Ho, maker of Puzzles and Dragons, has had, and they decided to acquire a small stake. This game was hitting the top of the charts for both iOS and Android, and it's actually one of the most valued iOS games, if not the most valued, coming in at $4.1 billion. So SoftBank is trying to bank on that at this time. And then to round out the trends, we talked about Facebook, Microsoft, and Yahoo doing some middleware deals, and here's another one, Wargaming out of Europe, acquired Big World, which powers their unique server technology that allows so many players to play World of Tanks all at the same time. They decided to take that in-house for $45 million. If we take a look at it from a geographic perspective, there's some interesting trends that happen within geographies where certain types of themes develop that are very popular and take off. And one of the most advantageous ways of having those ideas spread in a method that's secure and where the investment continues to grow is through M&A. The US is still the big dog here, about 50% of the deals, and this is from a target perspective, are coming from the US, and we see a lot of Asian buyers coming into the US to do those deals. And there's some deals happening in Asia and in Europe, a little bit less so than in North America, just because of that untapped user base that we have here. So taking a look at the fundraising that has been happening, Kabam has found much success in what they've been doing for a relatively young company, so much so that they are deciding to spread the wealth and have created their own development fund. And this development fund is going to be solely focused on bringing Asian developers over to the States. So they're going to help support them in finding publishers and relationships for distribution, as well as localizing their content for the US. We also see Supercell here that raised an astonishing $130 million for a $770 million valuation overall. And they're doing exceptionally well as well. Last quarter, their run rate put them on a track to hit $700 million in revenue over the next 12 months. So they're growing very quickly. And then we have Cygames. So Cygames develops the game Rage of Bahamut, and so DNA decided to invest about 20% stake in them. DNA publishes their game, and they just saw the success that they've been having and wanted a piece of that pie as well. So that overview covers our M&A trends and our fundraising. What can we learn from these events, and what sorts of things are happening in the marketplace that further show where the market is going in the future? The biggest one is the Asian movement happening between buyers and sellers. So from an overall base, Asia Pacific, Europe, North America, they're all about the same size, but all of the growth is coming from Asia Pacific. And they're hitting and developing those super giants that are hitting the tops of these pyramids. So we see Tencent on the very top, we see a lot of Asian players in the middle, and on the bottom of the pyramid, they're all trying to move up. And what's one of the most effective ways of moving up in scale and accelerating your growth is through acquisition. And 8 of the 10 largest M&A deals were done by these Asian players, filling in the gaps. There's, of course, challenges that remain between doing deals between the West and Asia. There's relationships that need to be built. There's some knowledge transfer, complications at times. But those gaps are closing as more and more deals are being done. Social casino, also one of the trends we want to highlight here. This is a list of the top companies by revenue. Caesars, real world, land-based casino, has made a few acquisitions to really put them in the lead here. They overtook Zynga this year. And then IGT is also on the tail of Zynga. I wouldn't be surprised to see IGT in the second place next year with the acquisitions that they're doing to support Double Down. And then one more thing I want to draw your attention to, Big Fish Games. Big Fish is the largest mobile-only focused casino game out there. They do legal real money in the UK, and their revenues have tripled in the last year. Another trend that we see, free-to-play has finally overtaken subscription this year, contributing more in revenue. And there's a lot of games that are experiencing great growth and adoption because of these free-to-play innovations that are happening. In fact, when you compare a MMO such as League of Legends or Team Fortress 2 being released in the States, their monetization is 8 times better than a regular social game on the free-to-play platform. So there's a lot of growth that can happen, and these are some tips that we're learning from our partners in Asia. And then lastly, one of the things we have to consider is how do people pay when they do the free-to-play? And there's a very great divergence between payment methods in the United States versus the rest of the world. So we see here about 50% of European payments are coming from alternative payment sources. In the Middle East, it's 80%. There's a lot more of the young developing world that's used to paying on their mobile phones. And how do developers effectively reach out to their entire user base? That's a problem that needs to be solved, and it could come from the fact that a few very large payment providers are going to grow up and take that space, or it may come from the other side where there's going to be a platform that connects to all these payment methods and effectively will allow developers to enter the platform and have access to all of those. So to wrap this up in one thought, we see mobile continuing to be very strong the remainder of this year and into the future. We carry around mobile devices, multiple at times. Free-to-play is really going to be one of the key items that's going to help mobile grow and monetize back and forth. But that also presents the problem of how do we effectively get payments into the space? That will need to be developed and happening over the next couple of quarters to effectively help this gaming ecosystem grow. Gambling, we're seeing just some early tailwinds happening right now. In the coming months and years, this will certainly take off much more quickly, reaching about $100 billion as predicted by Juniper Research. So there's a lot of money at stake there. And then we see Asia. Asia is investing in us both from acquisitions, from investments. There's a lot of back and forth. And there's a lot of potential there. So what we see from all of these is M&A will continue driving and be driven by these trends as an accelerator for future growth. And if you want any more information, we have some great World Tech M&A reports in the back, and feel free to take a look at those. Thank you, and if there are any questions, that would be great.
Hi, I missed the first couple of moments, but can you say or do you have any thoughts on the Latin American market and how that plays into either acquisitions or sales or especially in the payments concept?
Yeah, so there is a large IPO of a payment provider in Puerto Rico that was backed by a lot of private equity firms. And from the payment space in Latin America particularly, there are acquisitions and activities that's happening, but it's on a massive scale. So these are companies that have hundreds of millions of dollars in revenue that are being acquired. there's a lot of IT services consolidation in Latin America, especially when you hit over $100 million in revenue. And there's a number of new activity that's been happening actually in the last 12 months versus the last 3 years that has been showing a spike in Latin America. So we're seeing that as well in terms of our client base. Latin America is definitely opening up today.
Could you elaborate on an opinion you had in the presentation that the way for the traditional publishers is to right the ship is mobile acquisitions and the acquisition of some of these companies? I think the counter thought is that with mobile being somewhat hit-driven, then that can be kind of a dangerous proposition, and that for the traditional publishers, buying companies is not necessarily the way to change the trajectory of their companies.
Right, right. So it's not that the publishers are buying mobile companies, it's just that everybody is buying mobile companies. So if you looked at the list, there's a variety of all different segments that are getting involved in buying mobile. Publishers come from their own perspective and they have their own extended relationships, and they have kind of an upper hand in a lot of these relationships. So it may or may not make sense for them to buy mobile companies. It may, for larger ones that have scale, to not right their ship, but to increase their growth and increase and diversify their revenue base.
Can you elaborate on the valuation methodology for some of these acquisitions, most recently Backflip? Multiple of revenue, multiple of cash flow, engineering talents.
Yeah, so in Backflips, I don't remember if there was the exact revenue multiples disclosed. I believe it was a 70% majority acquisition there. But the way that we think about valuations, and especially, so you have a few different categories in terms of which phase of growth you're in. If you're in a startup phase growth or in an early stage growth, you may be valued by your engineering talent, especially more valuable if it's onshore versus offshore, more valuable if it's your personal employees versus contractors. And also from a startup perspective, if you have particular IP, that's valuable. So it's if you look at revenue multiples alone, they may not make sense, and hopefully they don't, because you want to be valued in that upper category. And then as you grow and progress through the stages, the amount of users that you have plays into that part, the amount of monetization and profitability. Profitability is always, once you hit profitability and can show a period of growth in that profitability, it certainly really positively impacts your valuation.
Okay, we probably have time for one more question, if anyone wants. All right.
Okay.
Thanks so much.